Welcome to this episode of InFocus. I'm Candis Fitch, Portfolio Manager at TriCert Investment Council, and today we are chatting all about the financial sector. Here with me to do that is fellow Portfolio Manager Lee Grimshaw. Welcome, Lee.
Thank you, Candis. Great to be here.
So, let's chat about one of our shining stars in the financial sector, Royal Bank. Can you give us a little bit of background on Royal Bank from the TriCert lens?
Yeah, the Royal Bank is certainly a pleasure to talk about these days, and actually consistently has been a pleasure to talk about. It is the largest position that TriCert has across the entire portfolio at over $100 million. It's the largest company on the TSX 300 with a $250 billion market cap. So just a ton of value there. And the second biggest player is actually TD at 95. So there is a gulf of depth between the two in terms of the headroom that Royal Bank has. And it's also, interestingly, the 24th largest bank in the world, and considered to be a globally systematically important bank, or what they call in finance vernacular, a GSIB. And that means that a failure at a bank like this would have significant impact on the wider financial system and economic activity. And so they're subject to greater scrutiny from a regulatory perspective and a greater capital buffer, so greater buffer of certainty and defense in the actual assets of the company itself.
Right. And I would just hazard to say, those are some of the reasons as to why we love Canadian financials, specifically Canadian banking institutions, tier one banks especially, because of these reasons. Is that correct?
Yeah, we like leaders in their sector, and they're definitely the leader in their sector. We like the fact that it's got a very diverse portfolio of businesses. We like the fact that they have worldwide reach, and certainly a dominant player in the North American and in the North American theater of business. And sure. Just on that note, from a return perspective, themselves and the National Bank of Canada were sort of the number two players in the year-to-date returns of the banking sector within Canada. So definitely a leader from all perspectives.
Fantastic. I know that we love Royal Bank, but on top of all of these other things, one thing that I know you certainly dig into is the valuation of the company. Can you give us a little insight onto their most recent quarterly results?
They had a great quarter, and they had their sixth straight consecutive beat and a raise from that perspective in terms of their financial performance. Their adjusted diluted EPS was $3.07 versus a consensus estimate of about $3.01. So that may not sound like a big margin, but it was a significant growth rate over the previous quarter of last year. The beat was amazingly and just it was, I don't want to say stunning, but it was certainly robust. It was across all business segments. And so a few of the major big drivers, because they beat across almost every segment, and they had growth in almost every segment. The two or three of the big drivers were the HSBC Capital acquisition or I should say HSBC Bank acquisition that they had in March, that closed in March of last year. Their capital markets division, and their wealth management division. All three of which provided huge tailwinds to the company with respect to their profitability. Capital markets operating profit was a bit flat, but they had a lawsuit that they did not normalize for, but their revenues were up about 12% on a year-over-year basis. So that was quite robust. The wealth management was up, earnings were up 95% year over year. And that there was a big part of that was due to the HSBC acquisition as well. And the robustness that we've seen in the capital markets, for everybody here who is an investor. Personal banking was up 18%. Commercial banking was up 19%. And insurance was up 67%, which interestingly on the insurance side, just interestingly to note that quite a few insurance companies, such as Berkshire, some of the major global reinsurance providers, had a bit of a tougher quarter given the hurricane that happened down in the south.
Right.
So that was a bit of a standout period.
Fair enough. And for someone as, as much of a behemoth as they are, those results are quite impressive considering they're already so huge. To see such large earnings growth is fantastic.
Yeah.
But I'm sure it's not all sunshine and roses. Can you talk a little bit about maybe some of the tailwinds? We've talked a little bit about the good things their way, but what have they been facing in the past year?
Yeah. So from a headwind perspective, provisions for credit losses were up about 5 basis points. We've seen that story almost across the board. But except for Canadian Imperial Bank, which had a reduction in credit reserves, but most of the other banks had an increase in loss provisions, and that's largely due to the Canadian landscape that has a more, call it transitory mortgage profile, given the maturity profile of the clients. And so the banks have been, well, not only the banks, but I guess the backdrop to that creates some economic uncertainty. And really, as we have, I'm sure everybody's been reading the paper, has created some economic headwinds, to Canada. And so, the credit losses have been, increasing. Now, that being said, there's an expectation of many analysts across the street that those credit losses will begin to subside and plateau after the second quarter of this year, which actually we think is going to lead to a big tailwind post Q2 of 2025 when those credit reversals come into effect. So the discontinuance of rises and reductions in credit for provision losses. So the headwind that we have today is going to become a greater tailwind going forward. Some of the other headwinds that they expect to encounter as well is going to be the reduced immigration. So for a bank of their size, I always say that they have a lot of beta or torque to the national GDP. And so if the immigration goes down, nominal GDP, not necessarily capital GDP, but nominal GDP will go down, and that will be a significant headwind. In terms of tailwinds, there are some interesting economic positives. There seems to be rising consumer income as people have garnered wage increases in Canada and maybe more so in the U.S. Solid savings rates and interest rate reductions and going forward. And then they've had rising NIMs on the back of loans and deposits, so rising net interest margins or gross margins for those who run businesses that call them by a different name.
Fantastic. I heard you mention, capital ratios. I know you guys look at lots of different metrics and whatnot that are specific to the financial industry. Can you talk to us a little bit about some different sort of financial analysis tools that are special to the banks and financial industry in particular?
So one nomenclature that sort of permeates a lot of the vernacular out in the financial world is specifically for banks is what's called a PTPP, and that means pre-tax, pre-provision earnings. And so because of the way that the accounting works for banks, they have to accrue for expected credit losses depending on how the portfolio is responding to the current economic time. And the really interesting part is that they have to present value the expected headwind of those economics. So it's a really big non-cash item that's out there. So tearing that back and tearing back the tax effects and just seeing what the base business is doing prior to those accruals, which can swing dramatically both ways at different times, it really gives you a better sense of the underlying business. So again, going back to our Royal Bank discussion, they had a 20% increase in the pre-tax, pre-provision, which is was definitely best in class across Canada. Probably the size of a number that I haven't seen in quite some time. That being said, we all have to take into account that the HSBC acquisition is part of the driver there, and maybe those numbers might tail off a little bit, but irrespective, even if it was half of that amount when you normalize for the HSBC numbers, it was quite a significant growth in their growth profile.
Just chat with us a little bit about how banks are doing in general in comparison to Royal Bank and with each other.
Yeah, so the year-to-date returns for I guess I would call it, I've done the six largest banks in Canada. It was about a 25% return, so it was quite a standout return. And the returns and the weighting is significantly at the top end of the range, so they would have seen a significant tailwind in their returns. So 25% was the group overall. The Royal Bank was around 36%. So wow. Quite a good number from that perspective. And then unfortunately TD, which is another big portfolio pick, they had some anti-money laundering issues, and that was a significant headwind. So they haven't done as particularly as well. Bank of Nova Scotia was sort of the number 4 player at about 27% return. So all solid returns except for TD.
Gotcha. And if listeners want more information on that, I know you and Mike had a conversation about the whole TD story as well. Yeah. They can go back in our catalog and have a listen. Well, that's fantastic. Thanks so much, Lee, for all of that wonderful information. And of course, if any of our listeners have any questions, please contact your CPA's financial advisor or your TriCert Investment Council PM, myself, and take care.